Good afternoon, everyone. Welcome to Fundamentals for Startups, a CoMotion Labs production. My name is Claire Inslee, Associate Director of Events here at CoMotion. We are a multi-industry incubator hosting early-stage startups from both inside and outside of UW. We provide our members with critical infrastructure and opportunities for learning, mentoring, and networking. And we're always looking to connect with founders in life sciences, hardware, climate tech, and tech plus. For a limited time, tech entrepreneurs can take Startup Hall for a test drive and see if our resources, advisors, and community are a good fit. Use this QR code to apply now. Fundamentals for Startups is a weekly lecture series on topics related to entrepreneurship. Every week, we bring in a new expert to share insights and answer questions. All of our talks are streamed and saved on our YouTube channel, and you can learn about upcoming events on our website. Just a reminder, for those in our audience, if you have a question, please make sure to wait until a member of our team brings you a microphone so that our online audience can hear you as well. Today, I am thrilled to introduce investor Jenn Henry, managing partner of VentureUs. She'll talk about navigating and reframing investors' questions during a pitch. Welcome, Jenn.
All right, hi everybody. There we go. All right. So I got a little bit of an introduction already, but would love to tell you a few more things about me. As you know, I'm a managing partner at VentureUs. I'm one of the newer venture partners in the Seattle area. So as a lifelong learner, I always hesitate to call myself an expert, but this is definitely a topic that I am passionate about and that I think is really important as a skill set for everybody and to bring broader awareness to it. I'm a tech industry veteran. I pretty much spent my whole career in consulting in tech. Mostly because I was raised in an entrepreneurial household, and I was too chicken to be an entrepreneur like many of you. So, like, kudos to what everybody's doing here. You guys, you guys have more bravery than I did. And let's see. Sorry. And I'm also an advocate for equity. My approach for a long time has just been to want to have more diversity at the decision-making table, especially when it comes to investments. But as I've learned more and more about it, this is a topic that is very appropriate for Women's History Month. I'm wondering how many of you in the audience know or have heard that only 2% of venture capital funding goes to women-led. Yep. But despite this, women-led startups generate twice as much revenue per dollar invested. This matters today because there's real data that there's bias in these funding conversations, and recognizing it is a critical skill, actually not only for women entrepreneurs, but for all entrepreneurs. And so my goal is for this session to equip you with some strategies to better present yourself and change the conversation. I talk to a lot of founders, a lot of female founders, blatant misogyny, shockingly, these are all quotes that I've heard from female founders in the last 6 to 9 months. Definitely out there, easy to identify. But implicit bias is a whole different ballgame. It's about not only what is being asked, it's about what's not being asked and how it's being asked. So the solution is, instead of worrying about who asks the question, the key is really, as an entrepreneur, getting the skill sets for how to answer them. And so hopefully today will give you a head start in being able to recognize biased questions, or at least risk-focused questions, and turn them around into opportunities. So my talk today want to cover the basics of what bias questions are. We'll do a little practice recognizing them, and then we'll talk about some reframing strategies. And we'll get into a little bit about the perspective from the other side of the table as well. And then hopefully I can give you guys some tools to walk away with to use in the future. All right, so first off, what are bias questions? Well, Harvard Business Review started this investigation by looking at the funding outcomes of female entrepreneurs versus male entrepreneurs. And they did a study to try to figure out what is it that is impacting potentially these funding outcomes. What they realized is that female entrepreneurs and male entrepreneurs were getting asked different questions when they were talking to the VCs. And it directly impacted the bottom line. They broke up the conversations into two different types of questions. Promotion questions, which are about tell us your potential for success, for gains. What are your hopes, achievements, your ideals? It was all about opportunity. And then there are the prevention questions, which are assessing risk. What are your potential for losses? What happens if this negative thing happens? What's your security? Are you being vigilant about X or Y? And when they measured them, they saw that everybody was being asked both types of questions, but there was a clear imbalance. Female founders were getting 2/3 questions about risks, and male founders were getting asked the same equivalent about opportunities. And it creates a cycle of bias. You get asked a question about a risk that prompts a defensive response, and that gives a lower confidence perception. And in the end, it impacts the bottom line. So, let's practice recognizing some bias questions. Promotion and prevention as terms just don't seem to be sticky with me. I tend to think of it as opportunities and risks. So I'm going to throw some questions across here, and if it sounds like a promotion or an opportunity question, let's get a little feedback from the audience. And if it looks like a prevention question or a question about risks, let me see a thumbs down. So let's start with, what will you do if your product doesn't gain traction? Yeah. What is your strategy to gain market share in the next 5 years? What makes your team uniquely positioned to drive this business to success? How do you plan to protect against customer churn? How will you prevent competitors from overtaking your market share? How can you ensure that your team is capable of executing this plan? How do you scale your revenue streams over time? A little more tricky. What are your plans to increase customer retention and engagement? What happens if your revenue projections don't materialize? What milestones do you expect to hit in the next year? Yeah. Maybe it depends on how it's asked, right? Those felt mostly pretty clear and easy, right? But I feel like it's a lot easier when you're specifically focusing on that. But when you're under a bombardment of questions, it takes a little bit of practice and time to see, to kind of work on your reflexes and what the proper responses should be. So, strategies for reframing. Just because you get a prevention question doesn't mean that you have to give a prevention answer. And research has shown that taking those risk-focused questions and turning them into opportunity answers positively impacts funding in your bottom line. All right, so there's several techniques for how to reframe the question. First, shifting from a risk to an opportunity. You can reframe it with a positive spin, highlight strengths instead of weaknesses, connect risk mitigation to growth, and flip the question to show a more proactive strategy. So an example of this would be turning how will you avoid failure into here's how our strategy mitigates risk while driving success. So I have a few examples for us to work through. Let's start from shifting risk to opportunity. So what if you get asked, how will you prevent customer churn? A reframed response might be, customer retention is a top priority for us. We're focused on increasing engagement through personalized experiences, which has led to blank metrics, adding some data in there. It works because you're highlighting proactive strategies for growth, right? Another technique is to reframe with a positive spin. You had asked, what happens if your competition goes after a fast follower approach? You reframe it to talk about your competitive advantage and what your moat is, what sets you apart. Highlighting your strengths, not your weaknesses. How do you know your team is capable of executing this? This is a pretty easy one. You should be able to brag about your team. Connecting risk mitigation to growth. Do you have enough runway to execute your vision? Talk about capital efficiency, strategic partnerships. You want to show your metrics, your financial discipline, rather than just reacting to the risk, right? The more data that you have, you can take that question and talk about the growth. All right, last one. You can flip the question to show proactive strategy. An investor prevention question might be, how can we tell so early if you have a product market fit with so few customers? You can reframe your response to say, talk about your early customer feedback. Here's here are the market signals that we have, and here's some data behind it. You're taking that question and refocusing it on your momentum, not on your risks. As an investor, the number of times I've heard, that's a really great question, and we almost, it happens so often, I almost laugh about it, but actually it's a really powerful answer to take the questions that you're getting, that you're answering, and not react defensively, but to acknowledge it, reframe it, and move on. The yes and technique, it gets used because it's such a powerful technique. All right, so clearly you've heard enough of me talking for the moment. I've put a few typical investor questions up here. I'd love it if we could find anyone in the audience that would like to take one of these and give it a try reframing. First question, quick question before maybe we do that. Who here has pitched a company that's in the audience right now? All right. Do you see anything on here that you have heard before?
All of them, pretty much.
All of them?
A lot of them, yeah.
Yeah. All right. So, Matt, since I know your name and you're answering out loud, could I get you to give us an example of how you might respond to one of these questions here?
Aspirin or vitamin? So do you want me to respond from the standpoint of my business, or?
Sure, yeah.
So let's do it. So is this an aspirin or a vitamin? So for my company, CommerceJet, I would say that it's an aspirin because we're solving a pain point that's causing causes a lot of issues with revenue growth for our businesses. So what we do is we operationally assist customers as far as helping them sell more and at the same time reduce issues that cause them to lose money. So from the standpoint of being a vitamin, I look at a vitamin as like it helps somebody that's already successful improve to a certain extent. What we're doing is we're actually solving a problem that helps them get better and feel better and make more money instead of the opposite.
The one thing I'd love as an investor to hear you add in there is, because when I hear aspirin or a vitamin question, I want to know that customers are willing to pay for it, right?
Yeah.
So, like, if you can add some data and statistics in, this is how much they're willing to pay, this is how much they're saving, they're willing to pay this much for us because of the boost that they get, that would be perfect answer. All right, any other brave souls in here?
It's not directly a response to this question, but it's something adjacent. A company I was talking with, looking to invest in, the female entrepreneur, was building a social network e-commerce site. And they had a brick and mortar competitor who just the previous week had gone bankrupt, a pretty big one. And I asked, like, hey, how are you going to be successful if this happens? So it was a very, defensive question. And she was able to turn it around really well. It really impressed me because she said, actually, this is a sign that people are moving from brick and mortar to an online community. And the loss of this brick and mortar alternative means that people can't sample it, see it, try it, in person. So having a community and being able to buy through a community is even more powerful. And then she provided more information. She said, you know, this is actually a growing category and provides statistics. So that really turned out a defensive question. And to be clear, this company was in the news. It was very much top of mind in this category. It was able to turn it around to show that this was not in opposition to her value proposition, but was supportive of it. And that really impressed me.
All right, we got one more brave soul in here. Or at least those of you that have pitched, I heard you've heard all of these. Do we have a...
Hi, I'm Ollie Downs from Curious. But I can talk about how we convince an enterprise to trust a startup like yours through the lens of a startup that several of us from Curious were involved in here in the Seattle area. So two things in response to that question. One, we had incubated the company within a larger business focused on that particular type of enterprise that we were intending to be our customers. Secondly, we had identified a partner who was a solution integrator, large solution integrator with high penetration in the vertical we were focused on as a partner who brought trust for us with the enterprises that we were selling to. So that's sort of how we defended that proposition.
Love it. That's great. All right. I appreciate everyone's perspectives on this. Let's move on to what it looks like from the other side of the table. As an investor, I think it's just important for us to have self-awareness on this. As technology continues to grow, I'm excited about ways that we can potentially automate or standardize the way that we are talking to entrepreneurs. I've gone back through recordings of interviews we've had with entrepreneurs and had to handwrite down every single question that we ask them and say to myself, okay, are we treating this female entrepreneur fairly? Are we doing the thing that we want to be avoiding? But nowadays, I have Read AI doing transcripts from all of my meetings. And I'm excited about the possibility for us and others to potentially find ways to really gauge if we're treating everybody fairly and consistently. I went to an AI summit with my partner this week and got extra. I have a bug in the back of my head that I'm like, I need to either find an AI developer or get back to my development roots, because we could totally not fix this problem, but find ways to measure how we're doing in our conversations with all the different founders, and make sure that we can hold ourselves accountable. So it's helpful for us to be aware as investors to know how we can reframe the questions. And as I mentioned earlier, one of my passions is about trying to diversify the investor group and the decision makers at the table. I've been, for quite a while, I was the only female voice in the room, and when you have 2 to 3 voices, it really changes the perception and the conversation. And not only female, but diverse perspectives and backgrounds, I think is really important. And so that's something that we're really focused on with Venture Us, is trying to trying to change those that are seated at the table to help us go after those great investments. As you saw earlier, some of the female founders might not be getting the money, but they are doing so much with it. So it's a great investment opportunity for us. As investors, we could also commit to diversity and inclusion goals. As a new venture fund, I think we're coming up close on our 1-year anniversary. We're still figuring out the ropes there, but we look forward to being able to have more conversations about how we can add that into how we're doing our investments. And seek feedback and accountability. I talked a little bit about having more female investors at the table, but that doesn't always mean that the conversation is going to change. There might be less bias in questioning, but I've heard mixed reports on that. Sometimes females can be harder on other females. But there's at least a shared experience, more of a better relation between the investors and the female founders. We've had the pleasure of having some really great female startups where we've had to where if it was a bunch of the men at the table and the founders talking about contraception or postpartum depression, right? It's not, you don't have the right people at the table to connect with and like understand that marketplace in the same way. And as I mentioned, potential for better investments all around, but unconscious bias still exists for everybody. And there's not a lot of us female investors sitting at the other side of the table. It's growing, and there's a great, strong community in the Seattle area of female VCs and investors supporting each other. But we're not holding the majority of the purse strings yet. And some female investors can hold women founders to higher standards. I had, I think it was on my list earlier, I had a female founder who was getting pretty much predatory offers from another former female founder turned investor, because she had said, oh, well, I had to deal with these predatory, unfair terms, so now it's my turn to hand them down and get them from you. It's not the way the world should be working. All right, so looks like I've blown through my talk, but I at least wanted to leave everybody with some practical takeaways. I've got a lot of notes on here that I don't want to that I will let you read through, but the big thing is know that this exists and have a strategy for how you're going to handle these types of conversations, and practice, and hopefully before you start talking to all those investors, because you're gonna get asked all the things, and having a response ready is going to make you more confident, powerful, and should help you turn around those funding conversations. I've put together, if you grab this QR code here, I threw together a little cheat sheet for you to take away from this conversation, with just some of the basics, a little bit about prevention versus promotion questions to keep that fresh in your mind, as well as some strategies to practice addressing how you can do it. So, all right. thank you for your patience with me struggling through a talk today that as a person that doesn't speak in public a lot, clearly I should have done a little bit more practice, but I appreciate your time. I appreciate your interest in learning more about this. And if you have any questions, I'd love to turn it to that.
I was wondering, like seems like some of these biased questions are a bit of a trap, and I'm wondering what your feeling is on asking a clarifying question as a way to reframe it. For instance, you had your group of individuals too young. How do you solve? How do you have credibility in the industry? And you could say something like, what advantages does credibility in the industry provide that you want, or something like? Is that too argumentative, or is that a bit?
Well, I feel like if I was part of that, I feel like that might not be the strongest response, because if as an investor, I'm trying to make the most of both of our time, and the reality is like, as we're trying to pattern match, right? And so we look at, oh, is this a young team? Do they really have the experience to grow this? We're trying to file you into a bucket, and so you asking about how to define that bucket, I'd much rather hear, yeah, we're young, but we have tons of energy, and we've got amazing advisors that are helping us along the way.
Okay.
Yeah, so like in that case, as an investor, that would just, I feel like that would not be as positive as an interaction as you just taking that and bragging about how that's a strength, not a weakness. And
okay, thanks.
Yeah.
Yeah, I was curious if the research on this subject or the investment industry itself has any kind of found any explanations for the root cause of this greater suspicion that female founders face. You know, is just like kind of pattern recognition gone amok, or has anyone actually found any reasons like why this bias comes about in the first place?
Well, why? Yeah, you know, I think the strongest research out there has just been from Harvard Business Review, specifically talking about this kind of cycle of unintentional bias and how there's just this focus on the negative side of things and the risks that inherently comes out. On top of that, there certainly are less female investors, founders out there, but that doesn't really account for the fact that they're getting so much less money. So I'm not sure I have a great explanation for you. I think it's something that certainly the whole answer isn't there. This is just an aspect of it.
Kind of continuing along those lines, are there any third-party organizations other than like major firms making statements about like, this is how we are trying to do things and change things? Are there any third-party organizations? Like, I know of some in the environmental space that investors are a part of, and they're trying to create like industry educational materials, for example. But yeah, are there any third-party groups in this space?
I have seen some accelerators, especially like female focused, that are working with founders on how to educate around here, but like third party, I assume you don't mean, there are some funds that will exclusively invest in female-led startups, but I assume that's not like a fund yeah, maybe there should be. That's kind of why in the back of my head I'm like, oh, we could automate some of this. I could actually collect data, and you know that behavior will change when you are measuring something. And so, like, I seriously need to find an AI programmer, just decide to go back to my programming roots and find a way to collect some data on this and share it, because then we could have some shared momentum around it. But I think that's a really interesting idea. I wonder where that would fit.
Thank you for sharing this with us. It's interesting information for anybody who's pitching, or even just good conversation, or interpersonal relations on how to turn something that's potentially negative into a positive. I'm curious this is a lot of mitigation for how to respond to some of these questions. But what would be a dream scenario for you so that the dynamic changes? How do you get to where you think you should be in kind of that relationship between the investor and the entrepreneur, and even just the makeup of those types of investors and innovators who are really trying to find common ground somewhere?
A dream scenario.
Yeah, it's a little bit of a big dream question,
Yeah.
but what would be ideal for you, and how do you achieve that kind of ideal? I mean, this is one way to do it, or one step, but it seems like there's some larger issues out there that should be addressed too.
Yeah, well, I mean, as I mentioned, part of my dream scenario is just to have more diversity, better representation for those that have the purse strings and that are spending the money. You would think that based on the data around the investment dollars coming back for female-led startups, that it would be a game of Moneyball where would be money being thrown at the female entrepreneurs. But the other half of that is, I think, similar to the female investor community here. My mentor, who's been doing this for over 20 years, she was one of the only women investors in the Seattle area for a long time. And I was talking to her about the female investor and VC community that we have now, and it was almost shocking to her, because it had started with her being out there blazing the path and supporting newbies like myself. And she was out there all alone and didn't have a lot of support. And now there's just this thriving community. And so, like, her taking those first steps out there, the momentum and the acceleration from that has had a huge impact on the VC community today. Not only her, but like all the other women that were out there. And I often wonder if it's the same thing for female founders. I can tell you that all the female VCs or mentors that I know, they try to never say no when mentoring someone or giving them their time. But there's so few mentors out there now. And I don't know, maybe some of the women in the room could disagree with me here, but their time is overburdened by supporting all the females founders out there. But as time goes on and we help more founders to be successful, there's going to be more mentors out. And so in my mind, like, the ideal world is that same momentum that we see starting with the VCs is continuing to accelerate on both sides. That's what I see as being an ideal.
For women founders, does it make sense to try to find the data that shows who's actually investing in women and go to them selectively?
So that's a double-edged sword, because there are groups out there that are investing in only female founders. And not all of those investors are financial returns motivated. They are impact motivated, meaning that they're potentially investing their money in a specific subgroup just to get that momentum turned in the right place. And so I can tell you that, like, at least today, female founders will get judged if they look at their cap table and it's only investors that invest in female-led funds. And so it's a bit of a double-edged sword. Like, you shouldn't, as a female founder, you should definitely pursue some of those, but you also need to think about the names that are backing you and make sure that there is a healthy mix in there. At least that's the reality of where we're at today.
So I would think in the world of VCs, there are still VCs that are predominantly male but do a better job of investing in women than some other firms. I mean, I don't know if the data is out there, but are you suggesting that maybe you just don't worry about that? You just find your best term sheet and, hit the road?
Yeah, I wish there was some data out there or a way for it to be more clear who is investors that have a broader portfolio, let's say. I had a second half to that answer, but I have lost my train of thought, so maybe I'll get back to it. Thanks.
This is a question in the abstract, but if you consider the two camps of impact-motivated investors versus financial-motivated investors, are there instances where a given startup can succeed and put together a kind of coalition of investors that come from both camps, or do they pretty much need to figure out where they fit, pick a side, and just focus on that bucket?
Now I've remembered the other half of your question, which applies to your question as well, which is, one, you never know, right? You just need to get in front of investors, and some of them will get what you're out there trying to solve, and some won't. And there's research you can do to narrow that down, to see what investors might have experience in your area or might like to invest in what you're doing, and you're going to have a higher likelihood of success there, whether they're an impact fund or anything else. So I think that it's as an entrepreneur, that's just the trick, but you also have to start with where you think you might be able to have the most success, but also cast a wider net, because you never know when you're going to get someone in the room that believes in you. And data and historical investments are not always going to say that.
So these are some really good insights and tools that you've provided. Are there patterns or other ways of recognizing bias based on socioeconomic, racial, other kinds of abilities, other kinds of differences that we can look into?
I don't know. I wonder if you have an answer to your own question that's better than my answer. John,
I don't know.
Yeah.
I have one example. I was thinking of something that we worked on a while ago.
This is my amazing partner, Jonathan Cagle, who also works with me. So that's why I can turn the question around and harass him a little.
Well, I'm thinking about, for example, there was a company that we ended up investing in a previous group that provided emergency savings. If you think about savings plans in workplaces, you want to take it from there?
Oh, no, keep going.
I was going to say, if you think about a lot of it, people talk about IRAs and 401ks and other sort of more sophisticated economic tools for savings. And this is a much simpler one. And it was really hard in an investment group that comes from people who generally are fairly economically savvy, but also, to be honest, wealthy. And this is a product that's aimed at people who don't have a savings account or maybe only have a very small amount. And it was shocking that I think a third or more of households have less than $500 in savings. I think it may have been less than $200. So anything from a broken leg to your transmission going out puts you into debt and limits your ability to work. So this company provided incentives and programs for people not to plan for years in the future, but to build up enough equity so that these things, these hiccups, these things that happen in life didn't cause you just to lose work, to go into debt, to get into payday loans and other things that is a descending spiral. And it was really hard to recognize and to put yourself in the place of their customers and to realize the market size for this and how this can be something that is really impactful. So I thought that was really eye-opening, and to question ourselves at every impact, and to make sure that all of our meetings are open, and to make sure that they're accessible from a hearing standpoint, or the fact that some people are gluten intolerant or can't meet, or hey, it's Ramadan right now, we may not want to do a coffee. Those sorts of sensitivities can block you from realizing opportunities and for encouraging people who come from all kinds of backgrounds that are not the traditional founders, and I'm saying traditional founders in a lot of different axes.
100%. Were you on that diligence with me? Because I was on the diligence for the company that he was talking about. And, you know, like Jonathan said, I don't have to worry about not having $500 in the bank. And it took a while for that team to understand the market and the customer, because we just had it's not part of our everyday lives.
Why would you save money and not get a great tax advantage or an interest rate or whatever? And it really was a very different problem. And to look at those perspectives and to look at the kind of questions that you give. And the same thing is true with founders who come from non-traditional backgrounds, non-traditional abilities, to really double check that you're asking the same sort of questions and looking at the answers in the same perspective is really challenging, but also, at least from a funding standpoint, opens up opportunities that can be, well, to be capitalistic, profitable.
Yeah. One thing that impacts me on a fairly regular basis, and when I think about the day when I'm not busy trying to learn and set up processes for like financial regulations and taxes and all the things, all the fun that we get to deal with running a fund, I'm a mom and I have an 11-year-old at home, and he is so cool. And I treasure, he's my only, and so this is like my one chance of him being 11 years old, and I treasure the time I spend with him because I still am smart and cool. And I know that's not going to last much longer. And all the events are in the evenings. All the events that I go to mean that I'm not spending time with my son. Now, granted, some of those times he is just on the computer geeking out, but I feel sometimes like I'm that demographic where the world is not designed around me and my availability. And so when I think about putting together, like I said, someday when I have bandwidth to do something like this, like a group for female investors or female founders to just like get together, I want it to be in the middle of the day because that's when my kid's in school and I'm not missing out on time with him. And so there's some of these structural things that everybody thinks, oh yeah, you know, after in the evening everybody's available and it's after work, but the world isn't always structured to meet everybody's needs. So how can we accommodate that?
I think near the beginning you mentioned, while there's relatively few female entrepreneur companies, there's significantly more either revenue or profit. Do you have any idea why this is the case, or has anyone looked at that?
Why there are fewer?
Or why the greater profit
Oh,
or
yeah,
revenue?
the revenue.
Any thoughts?
Yeah, it's.
Seems like an interesting thing to follow up on.
Yeah, I think it's. We'll go back to that. I think it's a mix of things. I think it's a mix of young girls 10 years ago not seeing the vision of, a president that's a woman or a successful entrepreneur that's a woman. There's a lot less mentors out there, and examples out there. And so when you can't see yourself, you don't know that opportunity exists. And I think that that's part of why there are less female founders out there. But this actually normalizes it based on relative funding, and even the ones that are out there are getting less. And maybe that's because they have less peers and less support as well. They're not part of the old boys group that's going out to drinks together afterwards. I can say that with my personal experience working in tech with men for, and 95% men for most of my career, I would not get invited out to things because it might make someone's wife uncomfortable. And so I didn't get the opportunities out there that every man potentially takes for granted. There's clearly more to this and more to be uncovered, but what I like at least about understanding this one piece about it is that it's actionable, and that it's something that you can be empowered to change.
Any more questions?
Thank you so much. I just had a question about how media and public perception of different sectors can potentially impact investor bias, and whether you're going to go into a pitch experiencing more of the prevention or promotion. And a little bit of context is I do technical due diligence for fungi-based startups, and with a microfund, I'm also a hopeful female founder. And life sciences and biotech has been currently in kind of a downturn following COVID, but AI is having a lot of positive media attention, and there's a lot of enthusiasm. And are investors likely to go along and be really enthusiastic with something that seems like it's coming up, or maybe they're inclined to be a little more critical and wary of it being a bubble, or is it just really individual based on the investor, the fund, the experience, and some of the goals? What do you think about all that?
Well, if you look at the data behind it, just taking AI, for example, right? There was definitely a lot of excitement and momentum, and you look at the funding over the last couple of years, and everybody kind of panicked about everything else and turned to AI, being like, oh, this is the thing that we can do. This is where we should be. This is the future. It already is the future. It's pretty wild, but I think it's an individual thing. You know, there's investors that will see your pitch and be like, take my money. And then there's like our philosophy, which is almost the other side of it, where like we really want to understand the investment and take the time, right? Like when we're talking, like the example that Jonathan was giving, taking the time to truly understand the business and kind of look under the hood to understand what makes that business run. Not everybody operates the same way, and it's very easy to go with the trend, and you know, and the reality is like in the health science sector, there's a lot of uncertainty right now. And personally, as like a techie girl, there's a lot of uncertainty because we don't really have anybody that understands deeply within our team FDA approvals, right? So that's not, we're going to steer maybe away from that, the things that we don't feel like we can truly understand, and that's just kind of an individual thing. So yeah, I don't know. I don't have a good question. I don't have a good answer for you, except that, like, you know, there are definitely trends that get jumped on, and that ebbs and flows with time. And certainly one thing that I have learned in the last year of helping run a fund and meeting other fund managers is that everybody has their own perspective and way at looking at things, and it's I wouldn't say the Wild West, but like it's, you know, there's no clear, there's trends, but a lot of unique approaches.
Well, if that's everything, please, everybody, a big thank you to Jenn for this presentation today.
Thank you.
And I've got two announcements. For next Friday at noon, we have Andy Oderkirk and Kelly Ingham, who work in research at Meta, all about frameworks for growth. And then please join us on Thursday evening, March 20th, for our next installment for Start Something. We will be featuring the Kraken owner and tech entrepreneur Samantha Holloway. So thank you, everybody. Enjoy lunch.